Good morning. Welcome to our Tuesday edition of Finance Breakdown. With earnings season around the corner, equity markets in the Western world fell yesterday. In the US, they were led by the Nasdaq's 1.25% loss, mostly on Trump banning social networks. The small caps Russell, on the other hand, lost a mere 0.07%. The dollar's week-long rise just may have lost steam with a bond sell-over. The dollar index seems to be forming a flag, but for now the RSI is strongly negative, and we're watching the asset plunge below the 20-hour moving average. Yesterday's 3-year bond auction shows a tiny yield increase, with the 3 and 6 month coming in level with last week's numbers. The 10-year, to remind you, was up 1.158 on Democrats' instigated spending hopes. Still ahead today, we'll be seeing the Red Book Index at just before 2 p.m. GMT and JOLTS openings at 3. In European stocks, it's easy come, easy go as the FTSE led regional losses with a 0.09% drop. The pound is back up against the euro this morning after the British Retailers Consortium revealed a 4.8% improvement in retail sales year-on-year for December. As we can see, the downward bound channel is still in effect and support at 0.8935 is still a long ways off. This morning we'll see retail data from Italy for November. Considering Australia and New Zealand part of the West, they and Taiwan lost index value as well, while Chinese markets were led up by Shanghai's composite, with a 18% increase. Even the Hang Seng gained almost a full percent this morning. As we can see, the index is comfortably right in the upper band with more of a tendency to break out above than below. The Nikkei, on the other hand, seems to have hit a bit of resistance at 28,266, but considering we've been rising for the first part of 3 weeks, that could just be another retracement. And with Japan's PM Suga announcing a COVID state of emergency, overnight data shows an improvement in the nation's seasonally adjusted current accounts, 2.34 trillion yen for November. An interesting release later today will be China's foreign direct investments sometime after midnight. After double bottoming, oil is back on the upswing ahead of tonight's API inventories count. Again, like most of our charts today, we're still with a definite uptrend above the moving average with a positive RSI. The corporate world this week is awash with companies jumping the Republican ship. Goldman Sachs says it will be rethinking its policies on a political campaign funding, and PayPal is blocking companies raising funds for groups that took part in the Capitol coup. But the highest price so far is being paid by Twitter, which lost 6.4% in share value yesterday after shutting down a chain of Trump-related accounts. Other than that, Walmart has announced a fintech startup alongside Ribbit Capital, one of the companies behind the Robinhood trading platform, and GM says it will be spending $27 billion to challenge Tesla's electric car. That's it for today. We'll have more again tomorrow. Bye for now.